All right, traders, we are back. It's midday. Good afternoon. Brett, I see you there. Good afternoon. Good afternoon. We're going to give it a minute or two. Let's see if it all balances out nicely here. At any time, please let us know if there's any technical glitches. Remember, guys, the information we discuss in this video is opinion and should not be construed as advice in any way. All right, let's get moving, traders. Good afternoon, and we are back with round two. We are back with round two for the day, 6th of July, Monday, Winter's Day. Steamrolling straight into the new month. We are halfway, and we are bringing you a quality content. Not only do we have the live trading rooms, we have our topic mentorship and refinement sessions as well, which we will get to later on in the week. We'll let you guys know how that goes. And then obviously we want to make sure that the guys stay ahead by walking with them every day into what is happening within the trading market. If you're here for the very first time, all our prompts are in the chat facility there. Sammy, I see you there. You can visit our account there to open up your trading journey with us. And then obviously, if you'd like to reach out to our support team, more than welcome to do that as well. Sammy, Brett, everything okay there? Am I audible? Is it all good? You can quickly put that in the chat facility. I will definitely just give it a couple of seconds, maybe up to a minute, just to ensure that all is well and running smoothly. All right. Our new trading rooms there, guys. There we go. 9:30, 12, which is this one now. We got a 1500 or 3 o'clock session, as well as a 6 o'clock. That's Monday to Friday. All right. I see it there, Brett. Fantastic. At any time, please let us know how it's going. But let's get ready to push here this morning. Now, when we left off at 9:30, we mentioned, that the NAS 100, the Euro USD, and the gold is what we will be checking out. I'll be watching those ones there today. Let's maybe just quickly loop back to some of the fundamentals that we should never, ever omit or leave out here, guys. The dollar is slightly stronger, obviously, today. Remember, it's trading around the 101 point area there, but it's still, close to a 3-week low. And that's important, all right? After its biggest weekly drop since April, it's now at that, 3-week low. And the weaker U.S. jobs, obviously, that report has made traders believe that the Federal Reserve, may be less aggressive with interest rate hikes. So the Fed outlook right now, as it stands, they see about a 56% chance of a rate hike in September. It's down from 64% before the jobs data. And so traders will be watching the FOMC meeting minutes later this week for clues on the Fed's next move. And I think that's important for us to note here, all right, because that's the dollar, but we're also looking at the dollar versus the euro. I have some updated information there on the euro here, just to keep us going on, here. And so from a Eurozone perspective, we have the producer inflation, the PPI, that's the factory price. The prices, they rose only about 0.2% in May, showing inflation at the production level is slowing down, and mainly because, energy prices, they continue to fall. The second thing there on the euro side is that the retail sales, consumer spending improved. All right. So we're having, factory prices that's rising. We're having consumer spending that improved slightly. The retail sales, they're rising at 0.2 in May. People spend more food and general goods, which fuels a lot of sales. All right. Which is very, very interesting because the euro is holding around the 1.14, as we can see, guys. Let me just go over to that chart over here. There's the 1.14 against the dollar. We were here this morning, and I mean, look at that move now. And I'm only dealing with that white structure over there, the 15-minute structure. So the Eurozone inflation, it continues to slow. We are seeing that the dollar is pushing against it. Christine Lagarde suggested that the European Central Bank may not need to raise any more interest rates as much as previously expected. So markets still expect only one more ECB rate hike in September, which is close to the USD. So you can see now from our analysis this morning, it's pretty straightforward here today. From an intraday movement, we are pushing down to the 1.13939. Now, this is stuff that we had mentioned this morning. That pip run there is about 24. What we can look for moving into, later on in the day, especially with the US, I'll be looking for some movement below this area over here, right there. I'll be looking for some movement. I just needed this to clear. If this clears now at 12, I'll be watching this at the US Open this afternoon. I think that's going to be a very important one for us, okay? I just wanted it to clear this white structure. That's it. If it can just break out of the white structure just below the trend line over here, that's going to be where I'm going to be looking for some action. The Tokyo session is done. We are in the London session now. We will overlap with the New York in a couple of hours. But for now, the dollar seems to be still running extremely strong. All right, so I'm going to say it again. I'm waiting for price to push below this trend line here. I want it to come out of the box, all right, out of the structure. I wanted to break through the structure. Then I needed to break the momentum. Now, why that momentum, guys? What's important is that, remember, this is bullish at this point in time. This is bullish. So if price breaks the bullish bias there, then obviously we're looking for some lower areas to be tapped. However, price can bounce from there, go back up again, and we can continue this move to the upside. So that's why I'm not making any hasty decisions right now. Now, I know there's a lot of people out there that may say, listen, can't we trade the 5-minute? Can't we trade the 4-minute? Absolutely. There's nothing wrong with that. You're absolutely in a position to do that. What about if we went for a much higher time frame, like the 12-hour, the daily, or the weekly, all right? Now you're dealing with a totally different thing here, because that's a low, that's a lower low. So if you're trading the daily frame, and this is the structure that you're looking for, you're looking at price so far away from 1.13 and 14, you're looking at price all the way to 1.17. Now, that may not happen today or even this week. And that's the reason why I did not price in that specific information. All right. That's why I didn't mention that, because we are only looking for what price could do today, tomorrow, and possibly on Wednesday. Because I'm giving maybe a 3-day max here for guys to possibly hold a specific trade this week. Because, I mean, it's really just the FOMC that is really pushing. So the Euro USD is creating that extension to the downside at this point. I'm not going to move. I'm not going to act. But hopefully we'll see something else now on the gold as well as the NAS. So let's switch to the gold now and see. So this one has definitely pushed now below this area here. All right. It's definitely pushed below it. Now, here's the question. Ash, do I just enter here? Now, there is different ways to look at this. There are different methods that people use. As an example, some guys are going to use a break, retest, and then when it comes out, they're going to sell. Now, whilst there's nothing wrong with that, it's just a different way of looking at the market. There's guys that will do that. But then there's other ways to also look at it, all right? You can go down to a shorter time frame, and you can actually time it with the amount of lows that you see closing below the 4154, which is the specific support that we are referring to over there. Now, you can use 2 lows. There's guys that uses 3 lows. Once the 3rd low is done, so this will be a correction as an example, all right? Then they'll use a 3rd low. And then what they will do is they're going to wait for that correction. Now, I'm talking minutes now, all right? And because of those 3 lows, there's a higher probability that price continues where? To the downside. So they'll wait for price to finish up that correction. And then once price hits just over the 61 point on the fib, so you can always take a fib and extend it. And the moment it closes beneath the 61, then many guys will take an entry right there. All right. Now, again, this is going to be subjective, guys. People's risk tolerance is different, etc. And so we must take those factors into consideration. Another way that you can look for entries here today, guys, you can always use an RSI. The RSI is a brilliant tool because it helps us assess the strength of the momentum, either to the upside, or it helps us assess the strength of the momentum to the downside. In this specific case, we are looking at price pushing possibly down. We have a firmer dollar, and we are saying particularly against the euro here, and we're seeing some of it is spilling over into the gold price. All right, remember gold is inverse there with the US dollar. We know that interest rates are coming in September. There's that 56% chance. Now remember, don't forget how they all mechanically work together. When interest rates are hiked, there is more attractiveness in the market from investors to invest in the US dollar. All right, that's important. That means instruments like gold possibly comes down now. All right, because there is a lot of interest in purchasing the dollar. So that would be against the gold, hence the chart moving down. And obviously vice versa, if interest rates are cut, it means that you're going to find investors moving their money away from the dollar, all right, and going into the other instruments like gold. Remember, interest rates are important because there's many investors that do bonds, or they invest in bonds. They want a high interest bearing bond. They lock themselves into that bond. But they obviously look at seasons. They look at the economic state of the country as well. So it's not just because it's a high interest rate that they're going to automatically go into the bonds. One must remember, if the bond yield goes up and you find that somehow rates gets cut, it becomes a very interesting thing there, because that new rate is going to attract a different type of investor. And there's many times when you fix your interest rate at a specific rate, your bond can become interesting or it can become less interesting. Higher rates is obviously going to be interesting for investors. Lower rates makes it less attractive. So at this point in time, we are waiting to see whether that specific rate hike that comes in September, what that will usher in from a strength in the dollar's perspective. All right. So let's now look at this gold price using the RSI and where the possible selling area is. And I'll be looking at this in the New York Open as well, pre-open and then obviously open. All right. So I'm using the RSI here, and I've got the line that I'm going to be placing at 45. 45 is the last level on the RSI before price turns into continuation. I'm taking divergence into consideration as well. I'm not just looking for entries. We want to try and be a little bit more specific and a little bit more accurate when it comes to these things. All right. So there's the 45. The minute frames, we've already continued to the downside. So I want to make sure that you understand that we've already continued to the downside into the oversold areas. And then I'm going to be moving up. The reason why I'm going to be moving up in time frames is because I'd like to find this average just dip below the 45. If I can get the average dipping below the 45, that gives me an opportunity to look for some action a couple of hours from now. So I'm going to go to the 1 hour, because the 1 hour is a fantastic viewpoint for intraday traders, as is the daily frame. And then obviously if you're looking at a little bit far more in terms of longer term, you're looking at the higher ones. But I'm looking at the 1 hour now, and I can see the dip here, this dip right there. There is a dip. Now, you can't see it if you don't know where it closed. That's the trouble that many guys run into when they use the RSI. Okay, now you can use the stochastic, you can use the MACD. Oscillators are very good for this, all right? The oscillator family of indicators. Now, many guys run into trouble using the RSI like this because they don't always know where this average closed or at which level of strength. You can see here on the RSI, it says 45. That's the level of strength. Remember, it goes from 0 to 100. 30 and 70 are the markings that come standard with the RSI that you'd know. But I add the 45 and I add the 55 because it is an area of continuation, either to the upside or to the downside. All right. And there's obviously things you figure out as you do go along in your trading journey. So what I'm going to do now is, because there may be some action on this one, so I'm going to go to my data window, and the data window is for the gold price. And I'm going to be looking right here, RSI. I've got a 14 period on, and I'm going to be looking for this specific area, that area there. Let me actually just highlight it quickly so you can see. I'm looking for that zone, and I'm also looking for the zone. Now, the reason why I'm looking for that zone is because I want to see, when you look at this area here, right there, look at the percentage. Look at the number. So here it closed at 44.58. Here it closed at 43.56. 44 and 43. Now, which of those are lower? If I go there, that's 44 and there's 43. Now let's highlight which candles that is. All right. I'm being very specific here with this. So it's that candle, this one here, and then it's also this candle over there. So these were the two bearish candles that closed beneath the 45, which signals continuation. Closed there, closed over here. Now, this is where the guys would possibly look at getting it wrong. They would sell right now. Now, if you sell now, remember we had an hour. The 15-minute is close to coming back into the 45. Look at that. And you're seeing a bit of divergence happen here. There we're going up, but here we're coming down. So the minute structure looks like we may be getting a correction first. We may be getting a correction first, all right? Which means I can't get in if I wanted to get in at market price right now. All right, does that make sense? Let me make sure the guys are tracking with me here. If you are, you can just give a thumbs there. Whatever makes you feel comfortable, all right? So because of the divergence at this area here, if I sell now, the minute frames you can see is tilting over. It's pushing above the 45. Look at that. That's telling me there's a correction happening right now. Look at that. As I go lower, there's a correction happening right now. So what I'm going to wait for, I'm waiting for the price to finish up what it needs to, and then I need it to come back to this area over here. So what I'll do is I'll be using this candle as my instrument, or not my instrument, as my designated area, all right, to make sure that I get an entry there. Now, I'm going to be taking a horizontal line, and remember, I'm doing this on the basis that the dollar is strengthening a little bit today, okay? It's strengthening a little bit today. So I'm going to be taking my horizontal, and I'll be using this low, that low, exactly there, as my designated area. Why? Because at that low, look at the RSI, it closed beneath 43.56. 43.56. I'll say that again, 43.56 on the RSI. This candle was at 44. So I'm looking for the lowest area where price closed, because if price breaks there again, that becomes an entry for me, all right? So I'm not going to be using the hourly. I won't be using the hourly to wait for a specific action. If a 15-minute candle, all right, can close like this, that to me is action enough. Talking intraday now, all right? And what I'm going to be looking for is, I'll be looking for price to push further down into this white block here. All right, it can move until there. It's okay, doesn't matter. Remember, you're scalping here, so you're working with these zones now. You're working with this zone, you're working with this zone, and you're working with this zone. There's 3 areas here. All right, so if I do this, that's the first area you're looking for. Some guys will get out there. Then there's a second zone here. And then obviously, needless to say, it's the bottom of that. So these are the 3 areas that I'm looking at. All right, that's if price breaks. So let me put the level there so you guys can see 4135.36. And that's what I'll be looking for. Now remember, we have a trading room at 3 o'clock as well. So I'm letting you know now that if I experience any action between this trading room and 3 o'clock, by the time you come back with me here at 3, if I'm in here already, it's because I got in based on what I'd mentioned. Now I'm looking for a 15-minute candle to be breaking below 4135. That's what I'm looking for from an action perspective. And this goes back to why we're saying that this is helping our students now understand why we're making the decisions that we're making. So if this was a normal trading room week, it would have been Tuesday and Thursday. Now today's Monday. You would not have known that I got into this trade because today's Monday. You would have only found it out yesterday. So we're running 4 trading rooms because we're letting you know what we're doing each day. Now, does that mean we're going to be looking at a lot of instruments? Yes and no. The yes part is whichever instruments are most likely to give us actions, we're looking at those. The others, which is the no part of the no part, all right, will be for us to examine, and then if there is movement later on in the week, we will probably get to that. All right, but for now, this is giving us higher probability. So I'm looking for a 15-minute candle here. I'm just looking for a 15-minute candle. That's it. And if I get into this trade and I have some action here, and it comes before 3 o'clock, by the time I log on and go live at 3, and you see that I'm in here, it's because I got in based on that merit. Okay. Now remember, I'm going to remind you again, I am not trading higher time long-term structures. I'm trading this white area over here. Just that alone, from there to there, is 300 points or 300 pips. There it's much more, 700. And obviously over here we're looking at 1,000. It's gold, by the way. All right, this is gold. So even if I just made money until there, I'm okay for the day. It all depends on what your risk management is, what your funds is. That's very important, guys. So this is really structured. And remember, this is only based on the fact that price has created an impulse. This trade here would be a deeper correction of this impulse, which is what I chatted about earlier this morning. I said impulse and then the opposing force. So this opposing force, if it breaks down further, I'm trading a correction from this impulse that happened there. That was a high that broke these highs here. So the reality exists that price can push up further. That's the reality. That's the risk that we would take. So this is really short term. This is minutes here. But the reality exists that price could push to the upside. All right. Euro USD, if we look at it, it doesn't look like the gold price. You see that? The Euro USD, all right, looks a little bit different. It could push up. It could push up because we've already created a low here on the higher time frames. So this one looks a little bit different. The NAS 100 is still at the same place. The NAS 100 is still at the same place. The same area that we had spoken about earlier this morning, it's still at the same place. All right. So I repeat you guys, the gold price, you can see that on a 15-minute, I'm watching it. All right. The only time that I will be changing, all right, my direction here is if price has to follow through past this white block here. If it can follow through past the white block above there, I'll be waiting for price to recover a little bit, and then I'll be moving in once that happens. But for now, these highs here have brought a resistance there. You can see it. These highs on the left has brought a resistance over here. Hence, I'm saying to you, price could first come down a little bit further. All right. So let's watch that very, very carefully. Remember the FOMC minutes later this week, guys. They will be giving us clues as to what is happening with that rate cut there, if any. The expectations, obviously, they can continue to drive the US dollar. The oil price remain very important, guys, simply because that lower oil helps reduce the inflation. In fact, let's maybe look at the oil price. Also, just for you guys to know, all right, the Euro USD is most likely to react to any comments from the ECB or the Fed. All right, the Euro USD. So watch it very carefully. Here's the oil price now. And let's go and see what is happening over here. So we'll be watching the oil price as well. So let's just loop back quickly. NAS 100, nothing there yet. Euro USD, still at the same place. And then the gold price, we're waiting to see what happens at that level there. Remember, all the minute frames is showing us the possible correction. And then we'll see what happens after that. The oil price here. Now, remember, the oil price has come back down to the same zone over there where it initially went up. That's when that's when the conflict started. All right, that was end of February, beginning of March. So we have now officially come back. A couple of months ago, we kept on saying, listen, we anticipate the oil price to come back down again because of the exhaustion that was on top there. And it did. All right. So what we're seeing here now is price coming back, and many guys may even think, there's been comments I saw over the weekend from President Trump saying that the oil prices will go even lower, which is a very, very interesting one there. We are looking to see that on the much higher time frames. But one cannot omit that this price has come down in the past 2 months considerably, and we may just get a correction on the oil. Okay. Now, many guys will use the fib. They'll extend it from there to there. And what they're going to do is they're going to use these different areas here. So you can use it like this zone there, this area here, and then the 50, and then the 61. Okay, now there's different ways you can look at these areas. So let me write them for you here. All right, so the 23.6 area over here is a surface correction, if I can put it like that. This one over here is shallow. Right, this one over here is a sharper correction. And then we have a deep correction at 61. The deep correction right there. So when I say price could be going to these levels here. All right, let's go and look at where those zones are now. I was actually supposed to do that before. Apologies on that. So if we go, so it's 80, 90. So it's between the 80 and the $90 a barrel. All right, it's between $80 and $90 a barrel. Right there. So it's going to be interesting to see if that happens. Let's go and switch on and see what are we actually working with here. Because if I go to a 12-hour, you can see this momentum is very important. It's an extended move. Let's see if there's any divergence here, guys. Let's see if there's any divergence here, okay? I can also say this to you, that this momentum that you see on the daily, there was, although you see one big movement to the downside, there was a break here. There was a break in the momentum, and then this really pushed down. So we want to see this break here. We'll only be able to see it on the lower time frames, okay? So if I go down, let's look for the breaks. There's the break. Look at that. The break started here at the bottom. So it came down nicely. And then look, there's the break in momentum. Up, down, up. And this should have divergence in it now. All right. This should have divergence. You're seeing this here. But we're going to put in an oscillator. And we're going to look for price actually pushing to the upside. So let's go. And there it is. Look at that. Look at that. Look at the moment. Look at the divergence there. You see that? So which means we are dealing with this structure here from a correction perspective. We cannot say that price is going all the way up there. Nope. That's a deep correction. So if anything, we could be going up to in between the surface and the shallow side for now. So let's go and do that. Let's go and isolate. Let's go and isolate the structure here now. All right. So I'm going back to a 15-minute. And remember, I'm looking for the 15-minute structure. So this is a break in from that high to this low. There were 3 breaks in between. When I say break, I'm saying price went down, it broke, came up. Then it goes down again, then it broke and it came up. So it happened 3 times, which is a bearish bias market structure. Okay, you see it there, Tanya? Beautiful. So now let's go up. I'm going to go up because what Ash wants to do is I want to see a straight line. I don't want to see this. I don't want to see those 3. I want to see a straight red line. Not yet. I've taken out 1. Look, I've taken out 1 there. So there's 2 left. Let's see. There we go. See, I wanted the momentum all the way down. So what I'm going to do now is I'm going to connect that high and that low. This is the minute structure right there. Minute structure. All right. Minute structure. And what I'm going to look for now is the hourly structure now. Now I'm going to go for the hourly. Watch very carefully now. I'm switching up. I'm not seeing anything yet. All right. 2 hour. Nothing. Now look at this. Do you see this area here? There and there was 1 break in the momentum. From that high to this low, there was 1 break in momentum. I'm going to go up because I want to take out that break there. Nothing on the 4. And there we go. Look at that. So this actually, it's a higher extension. Here we go. Let me show you. That specific high there. All right. So let's see. It's actually a high extension. So if I go to 6, it's taken it out completely. Look at that. And the hourlies, it's actually so accurate because look at this. That area down like this. All right. If I zoom out, the correction and the structure is exactly in alignment with how far it could possibly go. Now, what we need to consider here from the oil price is the following. If price, let me just get my arrow here. If price breaks out of this minute structure here, remember we saw divergence. If it continues to go up, the first area within this gray block is the surface. So it's standing still here now. Let me actually just extend this, guys. Hold on. Let me just extend this. We had the 15 minute. I had to go all the way up to the 30, if you remember that. I had to go up all the way to the 30. All right, so can you guys see this zone here? There's the first area there. So if you look at the divergence now, let's go and see what's happening with that divergence. It's there. Up. But here we're coming down. All right, but there we're coming down. Look at that. So we are not saying the oil price is going to go all the way to the upside. If you're doing intraday trading, remember you're trying to scale it. There's no buyer's bias here yet. All right, because this structure has not changed to the upside. There's no high there. You see this? There's no high here. So what that means is that if we can get a high like that out of, different story then. Okay, so let's see. We had $71 a barrel. Just now I did a 45. I did a 45 here. Are you with me there, guys? Let's make sure the guys are tracking with me here. I did a 45. But there's also a 55. Let's put it in place. There we go. All right. Now check this out. 55, above 55, a close above the 55 in the RSI, continuation to the upside. We're still below the 45. All right, we're still below the 45. I think that's a very important point there. Hold on for me. So what I need to do is, if I go higher, look how price is still bearish. Do you see that? It's still bearish. Meaning there's no high for us. We're still below, very oversold. So where the divergence will start is on the lower time frame. So if I go to the 15, I need to go down. Look how it's moving back up. I'm now going to look for an area here going down. Let's see. There we go. Look at this. You see it dipped above the 55? An attempt. That's the attempt to push back up. Okay, to go and start to create the high. So the FOMC can help us push to the upside depending on what it is, all right? Now, I need to show you where those areas are now. So I'm going to go back to my data window. And I'm going to show you right there which candle I'm referring to. This candle here was at 57. Closed at 57 on the RSI, the strength meter. This one closed at 56. So the candle we're going to be using here is this one. That's the candle. So I'm merging it. You can see it. I've merged it there at the bottom. And I'm going to put a level there, a horizontal there. That's the candle we're using. Right there. So I'll be waiting for a higher time frame on this one Hold on. I'm waiting for a higher time frame to close above the 71.962, which is there. Look at that, 71.962. Rejection after price dip below. If a higher time frame closes above here, then it simply means that the movement in the short minute frames until 74 begins. Okay? If that happens and price needs to go up further, then we're going to be waiting for the break there. So if I zoom out again, look, above 71.962, price is not even on its way to the surface yet. Price is just doing a small little correction that's not even close to the surface area. That's it. That's all that I'm trading. But if it breaks this white block here, then I will be looking to take it to this surface area over there. And that is it. It's so accurate. It is specific. And guys, I can give you the exact area that I'm going to be looking for. Let me give you the exact area that I'm going to be looking for. All right. You guys see where that arrow is? So the surface, I'm looking at around $79 a barrel. Look at that. Let me just take the data window off so you can see it properly, guys. I'll take the RSI off so you can see it. I just wanted to see the chart. So should price break above this white zone here, I'll be looking at $79 a barrel. That's what I'm going to be looking for over there. That's on the oil price. That's on the oil price. Okay. So at this point, it's a waiting game. Let's loop back. So I'm looking at 4 here. I'm tracking these ones throughout the day. Obviously, I'll be giving you guys some updates as to where we're standing in terms of fundamentals, if there's anything new that has come out that assists the setup. All right. Now, remember, we either trading the momentum, which is the dominant movement, or we'll be trading against that. And most of the time against it, it's the correction. This oil price, we are looking at a possible corrective move here. Look at the gold now. You see, this is the reason why I said be very careful of selling because that correction is happening now. Look at that. That correction is happening. Now, what commodities tend to do? What commodities tend to do, all right? Once they've created a low, let me just show you like this. Commodities is like the ocean, guys, all right? Once it creates a low, all right, it will create a high. Now, price pushes down and breaks the low. Then what you will see, and this is what you can actually go and check this out. Most of the time, what the commodity will do is, once it's created the low, the high, it will break it, and most guys will take a sell because that was the break. Then they'll put their stop loss up here as an example, right? They'll put their stop loss there, or they'll put their stop loss above these highs here. Then what price does is it goes up, 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 and then some of the guys even sell there. Then price breaks those areas because commodities don't respect areas like Forex. So you'll see price will go up, break this high here, create a new one, and then tank down. Then it tanks down from there. So go and check that out. I'm going to be looking at that actually today. I'm actually very, very happy that we're seeing this price action because it gives our students an opportunity to see the movement of the price. So I'm not going to get into this. I'm going to wait. I'm not going to do anything at this moment in time. The Euro USD here, you can see it's still at the same place there, guys. The NAS 100 still at the same place. And I said to you that the NASDAQ Many times the major stock indices, they move when the dollar is moving. All right. So when the dollar is stronger, you'll find that these indices push to the downside. When the dollar is weaker, you'll find that they actually push to the upside. All right. So these four is what we're tracking. I mentioned to you at 9:30. What's critical about what we're doing here, we are walking our students and everyone else that would like to become a student at the TD Academy. We are walking you through day trading in a week, and those weeks turn into months. So when the month is finished, you can go to your history and you can look at, for the month of July, I looked at these four, and this is what happened to them. And you start to track the consistency in each of them. So let's say you're trading all four of these. At the end of the month, you can go and isolate the profits you made on NAS, Euro, USD, gold, and obviously the oil. And you can see, out of these four, which of them did you have more success? That helps you do a bit of asset selection. All right. That's what actually assists you to choose what you feel comfortable with. So please don't take these moments for granted. You're looking at these four here. This can open up a whole different ball game for you. Some traders are very comfortable with commodities. Some traders are exceptionally comfortable with FX. Some wants to do the indices. It's going to be subjective, guys. There is money to be made for everyone. So at the end of the day, if you just have the right approach to it and you work on your consistency on finding those key areas that helps you gain consistency. Right now, Ash is not interested in anything else but this area here. That's it. I'm either looking to break here, or I'm looking to break this momentum that was coming down. Remember, it's coming down. But if I break there, I'm breaking it. So this structure gets changed temporarily. And listen to my words. It gets changed temporarily. So I'm trading a temporal move. I'm not trading an everlasting move. I'm trading a temporal move. That's very important to note. You can see we have our links in the chat facility for you to follow all our socials. Guys, so let's watch it. We're 2 sessions in for the day. So far, it's only gold that is giving us some form of reaction. The oil price is not giving us anything as yet. And guys, I'll be looking for possibly an hour frame. All right, an hour frame or a 4-hour frame to close above it. I have many students that enjoy trading the 4-hour. All right, 4 hours a fantastic candle if you're looking for a move like this. A minute frame here, yes, you may get into a much earlier spot. But oil, as we've seen, it has the tendency, the proclivity to move very slowly. All right. And then you find there's major economic and political news there that can, send it, into an aggressive state. But for where we are now, the oil price has subsided the aggression because of the normalization that seems to be coming into the market. All right. And that is obviously giving us that more consistent moves versus when we saw this. I mean, this was just crazy. From there, look how volatile the oil price was here, and that was obviously because of the Strait and the war that was happening in the Middle East. All right, but let's see what happens here. Once again, Ash is looking at possible movements from there, and if it breaks the white structure to the surface correction area zone, that's it. Not shallow, not the sharper one or the deep correction, only the surface area around $79 a barrel. All right. So guys, we're taking it nice and easy. We're pushing nicely. I'm taking my time. I'm speaking slowly at each setup, adding the fundamentals over there so that you can understand what we're doing. All right. It's quality over quantity at this point in time. It's quality over quantity. So join me again at 3 o'clock. And I can guarantee you'll come and tell T and myself later on in a couple of weeks what this consistent walkthroughs are doing every day for your trading journey. It's going to assist you. And remember, you are at liberty at any time. If you say, Ash, you know what? I know you said you're waiting for a 15-minute candle on the gold. My analysis is telling me that I want to go in for a short now. I hear you when you say commodities doesn't really respect the previous lows and highs. It goes and creates a new one. I hear you on that. But the way I approach the market, I go in for a sell maybe here. And if price goes up, I'll go in for a second sell. That all depends on how you risk your specific account. We cannot tell you you need to risk it like this. All right? Nobody can. Are we together, everyone? I hope that is tracking nicely there in the mind. So you may have a totally different place to enter. This becomes a guiding pillar. It becomes a guiding light to say, oh, okay, I also had a possible entry around that area, but I think I'm going to wait for it a little bit, or I'll wait for it to dip down first properly below the 4135. And Ash, I'm not going to use a 15-minute. I'm going to use an hour frame. Guys, there's absolutely nothing wrong with that. There's nothing wrong with that, okay? So I'll see you at 3 o'clock. I'll see you at 3 o'clock, and I'm looking at Euro USD, NAS 100, the gold price, and the Brent crude oil price. All right. I'll see you guys at 3 o'clock. You guys were fantastic. All right. Much better this time around. We can only get better from here. Guys, it's Ashley Reeve here, and I'll see you guys at 3 o'clock. Ciao, ciao.